All right. Today, the triple Qs were up 0.94%, and we hit another brand new all-time high. And just very quickly, I want to go back to April 10th when I said my next bold prediction is that the stock market was going to make a brand new all-time high this year. And this was back when a lot of people were coming out of the woodwork saying that we were just starting into a brand new bear market. We had the death cross where the 50 moving average was crossing down below the 200 moving average. And there was just lots of bearish sentiment and lots of very convincing arguments that the stock market was not going to recover from the damage that it had been through, and we were not going to see a brand new all-time high. All of those people who told you do not buy the stock market, it's too risky, it's going into a bear market, were dead ass wrong. So the reason I bring that up today is because I always teach you to follow price action, and I always teach you to block out noise. And if you listen to any single one of those people that told you that the death cross meant we were going into a nasty bear market and the top was in, you left a ton of money on the table this year. And this was a very strong V-shaped recovery from the previous all-time high. We hit that capitulation low, and we are right back up here at a brand new all-time high. So this is just a constant reminder from yours truly to follow the damn chart. There was plenty of evidence from the buying back here when we had that very impulsive green candle and then the higher low, higher high breakout. You should have known, even if you did not catch the bottom, that the market was trying to go higher by the end of April. And you should have caught the entire bull rally from the end of April to where we are today because the chart told you to. Now, we did catch the bottom, and it was very obvious to me that we were capitulating. And you can even go back, and all the videos are there where I said we were going to get the V-shaped recovery from the capitulation. And I was looking for brand new all-time highs, and I made that very clear. And I'm not saying you had to know that, but the chart demanded it as of the end of April, and this rally has been very painful for people that have been fighting it and trying to call for tops and trying to call for bear market relief rallies and saying that it was just a bear market relief rally before we just continued to go lower. Any one of these pivots, those bears could have scared the hell out of you saying we were just going to make a lower high and continue back into a bear market. So all I'm trying to tell you is block out all of the noise. This is still a bull market, and it's going to remain a bull market until we enter a recession, and earnings are just way too damn strong to have any recession. Even though I do think one is likely coming very soon, we will need to see proof from the chart because the chart will tell us we're in a recession far before the data. What I mean by that is the stock market will already be going down and pricing in the recession before you even know it's official. And we will see that in the price action on the chart, but we're just not there yet. It will come one day, and it will be a nasty bear market because recessions are usually very nasty bear markets. And this one will be a unique situation because of all of the global debt. And that day will come. Nobody knows exactly when, but we will see it on the chart, and we will have plenty of time to react to it. So block out all that fear-mongering bullcrap noise and just continue to follow the chart. And this is exactly what we were looking for on the triple Qs with that break to the new all-time high was that short squeeze up to about 546. And as you can see, that is exactly where we stopped today. And the biggest risk right now from that resistance would be that we come to backfill this gap. And remember, we have a ton of gaps to the downside, and those gaps will fill during the recession. And that doesn't mean we know when the recession is. It's just going to happen eventually. And all of these gaps to the downside are going to fill. So just be prepared for that. I think the easiest thing to do right here on the triple Qs is watch this level at 546. If we are going to get a rejection, I think it's going to be right here because it's just very unlikely that we have enough buyers to take us from 546 to 556 without a higher low pullback. Now, you could say this was our higher low pullback because it was a higher low back here on June 23rd when we did get that pivot off the higher low, but this is really just a consolidation or a sort of bull flag look, and it's not really a pullback that's going to reset greed and fear. We really need something to cause people to want to buy back into this market because if you just zoom out and look, the buyers have been in control since the bottom back here in April, and they're really going to start getting exhausted up here, meaning that everybody that wanted to buy into this market has already bought in, and eventually they're going to want to lock those profits, and that is just going to lead to more selling pressure. So watch 546. I'm not saying we have to pull back, but I'm definitely looking for it right here at 546. And if we do pull back, we could easily come back down to 532 to fill that gap. Now, if for any reason we're above 546, just continue to respect the bull trend, and above 546, we'll be looking for 555 to 556. If you keep it that simple, I think you'll do very well. It's just based on following price on this chart. There's no need to guess. It is a bull trend, but all bull trends still have pullbacks and higher lows along the way. So just keep that in mind as you continue to follow price price here. On the S&P 500 SPY ETF, we were up 0.78% today, and we have not yet made the brand new all-time high in SPY, but that brand new all-time high will be up there right around 617 and then 627. And again, we have that gap to fill down here right around 600. So what we could likely see in SPY is just a little bit higher to test the previous all-time high, maybe push out to 617. And then from there, again, I would be looking for that pullback back down towards 600. So just look for this. I think as we go into the holiday week, it's more likely we're going to see lower volume as people prepare for the holiday. And that low volume doesn't always mean we go higher. It could just be just enough fear and panic on low volume to send us lower quickly. And that could easily take us down to SPY 600. To the upside, you have that resistance at 613 and 617. And if we get out above 617, we're looking for 627. Today, we hit a brand new all-time high, and we are now up 20.68% year to date, and we have been at brand new all-time highs going all the way back here around April 28th. We were already breaking out to brand new all-time highs. Even though the market has just now started to break out to all-time highs, this is something we have been enjoying for over 2 months now, and we are absolutely crushing this market with the market up barely single digits, and we're up over 20.5%. So if you want to get this exact same performance, you can do that because this is my trade alert service where you get all of my buy and sell alerts. And every alert has the exact percent allocations that you need to be in for the TQQQ or the SQQQ. And all you need to do is simply match that percent allocation and you will get this exact same performance. This is the best way to trade along with me because you're going to be trading the exact things that I see in the market. And we are extremely cash heavy right now. So now is a great time to consider becoming a member. And you can find out how to join my alert service called TSC Trade Alerts by clicking on the link in the description of this video. So thank you for watching, everybody. Now go crush this market.